How's it going? It's Fred Atwater here. Let me pause that music. Um, First off, I appreciate you asking me and following with me. I love sharing this stuff. To me, it's just how my brain works. It's a very, very safe mechanism for making money in the market. In fact, it's safer in my experience than day trading. If you know how to use the options to your advantage. The long side of it, what that you buy on these, acts as a kind of a steam engine. If you're going upwards, you want calls, long calls, deep ITM calls, and if you're going on a bearish market, you want deep ITM puts going the other way. And then the the short side of it just really acts like a shock absorber to the market movement. A great example is today's Tesla movement. I have a call spread on that paired with a bull put spread on Tesla, and I didn't even hit my zero risk on the low side. Even with $8.70 down movement on that stock, I didn't hit the tolerance level yet. Now, if it breaks down below about 294-ish, I mean, we're getting close, 293-ish. If it starts to break down, that's when I would start to risk that. But I can just sit back and watch as the market does its thing and theta does its job. So here's STX. I got loaded up. I actually didn't do anything. I just typed in STX into the risk analysis tool, and it popped up from the thing that I showed you last week. Current trade price, close price today was at 46, right there at the crosshairs. And check this out. I screenshot grabbed what we had last week. This was the screenshot from the presentation I had, and check out the purple line. Let me pull up the draw-rific tool here so I can do my own squiggles. Okay, there was your purple line, and you'd made $50 or something like that. It was working for you, but the theta decay really hadn't kicked in for you yet, and you have all this space that I was recommending that you just sit back and wait. And a little over, I forget, that was a week ago or so. Whoops, I didn't turn off the draw tool. That was roughly a week ago. I think it was maybe a little more. But whatever, it's a week. So here's the new one, but check it out. Look at all the theta decay, because your previous purple line, I don't have purple on the tool here. Let's just use something light blue or something like that. Your previous line, your previous arc was down here, and you'd made a little bit of money, but now you've made all of the space that's in here on theta decay, and what you have remaining on the next 2 weeks is right here. And what we'll see in the next about 10 to 14 days here is we'll see a lot of that disappear, as long as the stock stays trading within range. And what will happen here within a week or so, this purple line will grow up here, and then it'll actually, in the last week of trading, you'll see it'll just kind of be up here as you progress and make profit on that. I want to show you something else real quick on this. I still have your cost trade here. I think it was 1220. What's that? 1222 in here. So keep that. And my recommendation is then you, if you follow this or do whatever, it's your money, but roll it forward, and then your cost basis actually becomes lower because you become a net credit to cash. And this thing really, really works. The thing I wanted to show you here was how to figure position delta, and see if I can do this in just 2 minutes, 2 or 3 minutes or less, so that you can see this. The machine will actually do it for you, the Thinkorswim platform, but I want to show you how to do it manually so you know how to do this. This you had the 30. Sorry, what was your strike? I gotta go back and look at that. Hang on just a second. Let me go back to the trade tab, or sorry, the analyze tab. 35.47. Okay, sorry, I couldn't remember what your spread was there. So back here to the trade tab, the 35, and I want you to look at this. Oh boy, let me get my mugshot out of the way. I want you to look at the number here under delta. And I know you said you were kind of familiar with the the options and the way they do for you. 35 here and all the way on the left, got a 0.75. Okay, that's the number we need. Let's remember that in our nugget here, and then go back up here because you have the 21 Aprils, and those are the 47s, and your position delta there is a 0.38. And the other thing I want to pay attention to is the 3 cents of theta decay. Remember, that's $3, and then it's actually times 100. I'm sorry, 3 cents times 100 is $3, and then times the number of contracts is 3. So you have $9 per day in theta decay, and that's what you're profiting off of. You only have 3 contracts. Recognize if this goes up to 10, 20, 40, 50 contracts, that's where the real math and the real power of theta decay magic kicks in. So you have a net position theta decay of about $9 a day, because the decay on the leaps is very, very negligible. It kicks in within, I mean, it'll be like a year and a half before you start seeing appreciable theta decay on those on those bad boys. The 47s here. Your net position delta was 0.75 times. Let's go back over here to this chart so I can do some quick math with you. Draw a tab. 0.75. Okay, times. That's the long delta times 100 times your contracts. Okay, so that would be 300 times 0.75, and again I'm doing this manually. 300 times 0.75, so you have a 225 delta long here. That's equal to 225. Okay, and on your short side it was 0.38. These are minuses here too. Times 100 times 3 equals, okay, there's a reason that I'm doing this, because it's going to make sense here. Let me pull up the calculator again. It's 0.38 times 100 times 3, so you have a negative 114 delta on that side, because it's a negative, it's a short, minus 114. And this number right here, this magic little number we're about to do, is the summation of those two. So 225 minus 114, you have a net position delta of 111. And so in your head, what that means, you have 111 deltas. Okay, so if the stock goes up $1, your position will go up in value $1.11 is exactly what that means. One delta is $1. So if you have 111 deltas, that's $1.11 for your position. I'm sorry, it'll go up $111. I don't know if I said that right before. And again, you can imagine the power of these, because some of my positions are 20 and 30 contracts deep. So $1 has a lot of effect and movement. Plus on that theta decay side, some of my positions decay, you know, $100, $200 a day that you're just collecting in that theta decay. You can do your net position. So what do we say it was? You have a 111 net position delta, and you have a right now you have a 9 position theta, and this is a minus 9 theta because of that short side decay. So you're making $9 a day. That's the linear relationship. Remember, options decay at an exponential rate, especially near the end of their life. So this $9 you'll actually see increase toward the end of that life cycle. I encourage you to think in terms of delta, even when you're trading in straight stocks. If you buy 100 shares of any company, you've just bought 100 deltas of that company. Then if you sell calls against it, you can know what your net position delta is, because if you sell calls against that, you're going to have a matching negative delta that will affect the way that stock moves. All right, hey, thanks, man. That's a quick 10 minutes on your position. I'd say just keep on hanging to it, man. The chart. Oh, before we go, this thing's got 30 seconds left. Turn that off. Chart. I had your thing up here, and I put this up in a different way so you can see that your no risk tolerance zone, as it is right now, looks exactly like this. This was a manual drawing I had to do in here. So that's your no risk presentation. You can see that favors to the bull side as well. All right, this thing's going to end on us. So have a good day, man.